Well, meantime, stocks are surging after Fed Chair Jerome Powell signals that rate cuts could be coming. The Dow even hitting a new record. The Fed Chair making the announcement this morning as he is facing and has continued to face intense pressure from the Trump administration. Investors expect the Fed to cut rates next month, but some have grown less confident in that prediction even after today. NewsNation anchor Alicia Nieves live for us there in New York. So, Alicia, still plenty of uncertainty.
Yeah, I mean, Wall Street, on one hand, and you point this a moment ago when we saw the major averages kind of pop, are really excited about this news. It's a highly anticipated speech. They wanted to hear the Fed kind of take a more accommodative stance as opposed to the restrictive stance that the Fed has taken recently. And that's what we got here, which is good news. And for those who don't understand monetary, policy jargon, when we talk about restrictive stance, that's basically what we've seen Fed Chair Powell in the last couple of months. So concerned about inflation that the Fed chair and the Fed more broadly is willing to restrict kind of economic growth, keep rates where they're at, potentially even raise them to try to curb inflation, to now potentially shifting the worry to the job market, the labor market, accommodate that market by spurring job growth via some rate cuts. So Fed Chair Powell, in the language of his 30-minute speech, really talked about the ongoing concern with inflation. But for the first time, we started to hear him kind of, reiterate sentiment on Wall Street that has grown over the idea that maybe inflation, when it comes to tariff, is a one-off pressure, and maybe the bigger focus really should be on the job market as a result of the latest jobs report that showed really declining job numbers being added over the last couple of months, just 73,000 last month, and then a major revision to the last 2 months that showed only 14,000 and 19,000 jobs added for June and May. So the Fed chair spoke for about 30 minutes, but if you didn't get the chance to watch all 30 minutes of that, here's just 30 seconds that I think really hit home where monetary policy stands right now, where it's going.
Putting the pieces together, what are the implications for monetary policy? In the near term, risks to inflation are tilted to the upside and risks to employment to the downside, a challenging situation. When our goals are in tension like this, our framework calls for us to balance both sides of our dual mandate. With policy in restrictive territory, the baseline outlook and the shifting balance of risks may warrant adjusting our policy stance.
Yeah, that last line there, really critical, may warrant adjusting our policy stance from restrictive to accommodative. This is something the White House has been calling for months now. So good news from them, although the Fed chair has been adamant that he's not doing this because of those calls and pressures from the White House, really because the data is now showing that it's more appropriate to kind of take that stance. He did reiterate, though, he's going to proceed cautiously, right? Between now and September 17th, where we get the next decision on any potential rate cuts, there are some critical data points that'll come, some reports, PCE, the Fed's favorite gauge for inflation, that will come out. We'll get CPI, Consumer Price Index. That's also another inflation gauge. And then we're going to get another jobs report. So right now, the probability of a rate cut that actually has elevated in the last, couple hours here to about 90% for a quarter, basis point rate cut. But that still is lower, as to your point a moment ago, than we saw about a month ago. But markets mostly, higher as a result of the Fed signaling he's going to move from this restrictive stance to an accommodative one. Nichole?
All right, so Alicia, speaking of that intense pressure from the administration, while the Fed chair was speaking, President Trump making some statements saying he will move to fire Fed Governor Lisa Cook if she does not resign. What more do you know?
I got to say, first of all, typically the Fed is more of a boring economic body that we barely talk about. That has obviously been, a very different scenario over the last couple of weeks between, President Trump attacking Fed Chair Powell, calling him names like a numbskull to too late Powell. Then just a few weeks ago, we did have one of the 12 governors actually resign. And then now you have this, the president threatening to fire one other Fed governor here, this one being Lisa Cook, and it follows some allegations that have recently popped up for Lisa Cook. I should say these allegations are from a political ally of President Trump, the U.S. Federal Housing Finance Agency Director, William Pult. And basically, he made these allegations in a tweet, accusing Cook of basic mortgage fraud. He hasn't provided any additional evidence to that. Cook has since come out and said that she, is willing to provide any evidence, when a formal inquiry is basically made, but, quote, has no intention of being bullied to step down from her position. All of this, though, why does it matter? There is some concern that the president is potentially trying to strong-arm the Fed and gain more control, and this is potentially a tactic to do so. So this saga continues, and we'll continue to follow it. But
thank you for watching. Subscribe below and download our NewsNation app right now on your phone, and you will get fact-based, unbiased news for all Americans.